Hi, I'm A Bissen. Are you self-employed? Have you been in business for at least 2 years? And have you gone to apply for a home loan at your bank or credit union and been denied because you didn't show enough income on your tax returns? Sound familiar? If it does, you've come to the right place. The type of loan program you're looking for is called a bank statement loan program. My office does a ton of these here in the state of Florida. This video is just one part of an entire educational workshop designed to quickly get you familiarized with bank statement loans. So be sure to subscribe to the channel and check those out. In this video, we're going to be covering one particular topic, the minimum criteria to qualify for a bank statement loan. Let's get started. A bank statement loan is designed for business owners who have been in business for at least 24 months. If you're an independent contractor or a 1099 wage earning employee, be sure to check out a different but similar kind of loan program called a 1099 income program, and I'll include a link in the description below. You'll find that to be much more beneficial for your type of income. So here is the minimum criteria to qualify for a bank statement loan. You need to be in business for at least 24 months or longer. You'll provide us the most recent 12 to 24 months of bank statements. These can be business bank statements or personal account statements, but make sure it's the account where you make most of your ordinary business deposits. We prefer to see 24 months because that can often help us get you a slightly lower interest rate, but sometimes 12 months is a better approach, especially if your most recent year qualifies, but the year before that had a significant ding in your income, such as COVID impacting your business in 2020, and you may have had a rebound in 2021. That would be just one obvious example. By the way, if you're curious about how the income is calculated on this type of loan, be sure to check out our other video called How Income is Calculated on a Bank Statement Loan. I've included a link in the description below. Credit scores. For owner-occupied or second homes, the minimum credit score for both applicants needs to be at least a 620 or higher. Now, if there are two applicants, we're going to use the score of whichever applicant makes the most money. However, again, all applicants need to have at least a 620 middle FICO score or higher. If your credit score falls between 600 and 619, we may still have some options for you, but be sure to consult your loan originator. Minimum down payment for a bank statement loan is 10% for a primary residence or second home. The primary earner on the application needs to have at least a 620 to a 659 to qualify for a down payment of 20% or more. Now, for investment homes, the minimum down payment is 20%. If you've experienced a derogatory credit event, such as a bankruptcy, short sale, foreclosure, or deed in lieu of foreclosure, this doesn't necessarily stop you from qualifying for the loan, but it may affect the loan parameters. So if this has happened to you, just be sure to mention it to your loan originator at the time of application. Verification of recent housing history. So if you already own a home, we'll be verifying that your most recent mortgage has been paid on time. If you've been renting, we'll need to verify your rental payment history. So if your landlord is what we call an institutional landlord, such as a property management company or apartment complex, we'll request a 12-month rental verification history. If your landlord is an individual person, for instance, then we'll need to see 12 months of canceled checks made to the landlord. Total funds required and reserves. We will verify that you have the funds for three things: your down payment, the settlement charges, and the reserves left over after closing. Reserves are the funds left over in your account after closing, and they need to be equal or greater than 3 to 9 months worth of the new total housing payment: principal, interest, taxes, insurance, and any homeowners association. The reserve requirement is dependent on how well qualified the applicant is. Well-qualified applicants will only need 3 months, whereas applications with lower credit scores, for instance, may need to show 6 or 9 months of reserves. For instance, if the new housing payment is $2,000 a month and there's a 3-month reserve requirement, then you'll need to demonstrate that you have at least $6,000 in your account left over after closing. Gift funds. If you're receiving funds from a family member with no expectation of repayment, this is called a gift, and gifts are allowed on a bank statement loan program. for owner-occupied homes and second homes only. Just keep in mind that if you're receiving gift funds, you still need to demonstrate that you have at least your own funds equal to 5% of the purchase price and the reserve requirement that we described earlier. Then the rest of it can be used towards the down payment and settlement charges. And that's it. We hope you found this information helpful. If you'd like more information about bank statement loans, consider subscribing to the channel. We would love to have you. And be sure to share this video with your business owner friends. This can make such an enormous difference in their lives. And if you're in business and you've gotten this far, chances are, I'm sure you'd agree, that it wasn't because you took no for an answer. So stop letting these banks and credit unions tell you no when we have more reasons to say yes. If you're looking to purchase, refinance, or get pre-approved to purchase a home anywhere in the state of Florida, call our office. We would love to assist you with your next transaction. Thanks again for watching. I'm A Bissen, and this is Unconventional Lending.